So, been doing this now for about 25 years, and two things still sort of surprise me when people meet with us at Nelson Financial Planning for the very first time. And I suppose at the end of the day, these things shouldn't surprise me because these two things are very much part of sort of the ongoing trends in the financial industry. Certainly have heard these things before. So maybe surprise isn't the right word because I've heard it so often over the past 25 years. Maybe it's two things that sort of trouble me, if you will. So we'll get into what that is here on this segment of the program. So welcome on into Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. We're one of Central Florida's longest running radio programs, also coming to you on a host of podcast platforms. So make sure you subscribe to us on your favorite platform, whether that be Spotify or iTunes or Amazon Music, whatever the case may be. We are on it, and we've got a dedicated channel just for you. When you find us, make sure you subscribe. If you want to see us at work in our very own Nelson Financial Planning Studios, for those of you who have visited the office, we know that we have a studio in-house here at the office. For those of you who want to see that, you can go to our YouTube channel. So make sure if you have any trouble finding those channels that you visit our website, nelsonfinancialplanning.com. Upper right-hand corner, you'll see the icons. Click on the one that looks most familiar to you, and you'll get immediately connected to our channel. Make sure you subscribe when you do that, and then that way you don't have to kind of go through that whole search thing again. It makes it easier to find us. My name, of course, Joel Garris, certified financial planner, certified financial fiduciary at Nelson Financial Planning. So what are those two things that still surprise me? After all these years of doing it, what are the two things that still surprise me? Surprise may not be the right word. Maybe it's trouble me, okay? Number one, people who think that they don't have enough money to do business with us at Nelson Financial Planning. Listen to that one again. People who don't think they have enough money to do business with us at Nelson Financial Planning. I get this one actually quite a bit. And I understand where it's coming from, right? Because everywhere you turn, if you see the ads, if you've got a $500,000 portfolio, if you've got $1 million portfolio, please call us. You're who we want to talk with. Now, I don't know about you, but maybe as I'm getting in my old age, I'm getting to be more of a curmudgeon, maybe more like my long deceased father-in-law, Jack Nelson. Maybe I'm getting more like that. But my wife claims that I am, by the way, but that's a whole nother issue. When I think about that, what the real message is behind that, at the end of the day, it's basically saying, we don't really have any interest in helping you unless you've gotten a certain amount of dollars. And why do you suppose a financial services company cares if you've got a certain amount of dollars? Well, because that makes you a profitable or a more profitable client. If you've got a $500,000 account, they're charging 1.5%. Hopefully it's not that much. If they're charging a certain percent, well, then that's more money, right? So even if you do the simple math and say, oh, we're charging 1%, though a lot of firms charge 1.5%, which gets me into the second thing that troubles me after all these years. Well, that's $7,500. If you only got $100,000, well, then shoot, I'm only going to get $1,500. That's not worth it. It's not worth it. You're not profitable. So we have no interest in actually helping you. And the problem that I have with that, if you stop and think about that, I think you should be bothered by that. If a firm has these thresholds, then ultimately they're only looking for clients that fit their particular profit model, their profitability formulas, right? So at the end of the day, what's going on there, in our humble opinion, is that that's not really ascribing to any kind of a fiduciary duty of any sort, in our view, right? Because if I'm not willing to take somebody because there might not be a profitable client, then how can I say that I'm following a fiduciary duty of how I'm supposed to be helping people, providing the best possible advice at all times in all circumstances. Doesn't make sense. Doesn't make sense to me. At the end of the day, in the 25 years I've been doing that, I've never really understood how you sort of mirror or combine those two things together. How can you advertise that you only want somebody with 500,000? And frankly, a lot of places said we only want people with $1 million, and actually think that you're going to get advice that is truly in your best interest, because the entire marketing approach isn't really in everybody's best interest. It's intended to only be in the interest of attracting clients who will be profitable to said firm. So anyway, that's one of the things that troubles me after all these years. People walk in and say, Joel, I've only got $300,000. Can you help me? Would it be okay? Do you think you could help me? Is that okay? Come on. If you're truly in business to actually help people, then that should be a non-starter of a question. One of the biggest reasons why at Nelson Financial Planning, we've never had account minimums. Our belief is that we're here to help. And the reality is that in today's world, maybe you're just starting out investing. Maybe you're just starting out retirement, trying to figure out, okay, well, how do I kind of get all of this to work? It, might not be as much as I kind of thought it might be, but hey, this is what it is, and how do we make this work? Those two situations are probably situations that actually need people more or need more help than the person that's got a few million bucks, right? So at the end of the day, the goal should be maybe grow that money, right? You want growth, maybe grow that money over time, maybe turn it into $1 million, who knows? So anyway, that's number one. It is staggering how much that one comes up. Number two, and we alluded to this earlier, it's the staggering cost that people pay. And this is one of the great hoodwinks, if you will, the financial services industry, that they've been able to sort of convince the investing public that you need to have an advisory firm and it's got to be on a platform so that we can really invest your money. And the problem with that, as we've talked about certainly many times on prior episodes of the program, is that it leads to a higher cost. Why? Because the cost is now broken into two parts. It's the advisory fee, and then it is also the expenses of the investments that you own. So you got to remember to add those two together. By splitting it up, it makes it seem like, it's not really as much as it is. But investor costs always the sum total of any and all expenses associated with said investment. What is further shocking out there is the number of people that are still getting charged 1.5% or above, which when they're charged 1.5% on advisory level, they're not getting charged. They're not including the underlying expenses of the investment. So not uncommon to see an account like that being charged cumulatively over 2%. Well, if we're in an inflationary environment and a higher interest rate environment, and we got a market that's not necessarily, growing at the same rate when money was cheap and inflation was nothing, seems to me that maybe paying a little bit more attention to the cost might be a good idea. The reality, of course, is that folks have no idea how to calculate it. Well, I'm going to tell you how to do that. Okay? Look at your quarterly statement. Look at your statements for the past 3 months. If there's a line that says fees and expense, go to that. If it's a quarterly statement, multiply that by 4. So that's the annual amount. Take that annual amount and divide it by the value of the account. Multiply that number by 100, and then you will have the percentage that you're paying on an annual basis. Don't minimize it by thinking it only shows up on the statement once a year. It shows up on the statement every quarter. So you got to take that number, multiply it by 4, divide it by the balance, multiply that then by 100, because remember, we're looking for a percentage. I know this is a weird math exercise, but that will allow you to get to the bottom number of exactly how much you are paying on an annual basis. Pretty important calculation. I would encourage all of our listeners to do that. The reality is, you may get surprised by what that math may show you. We're going to take a break and continue here on Dollars and Cents with Joel Garris of Nelson Financial Planning.